Welcome to Graphite Hub's interview series, a series dedicated to all things graphite. Now, today we're joined by David Christensen, Managing Director of Renascor Resources. So, welcome back, David.
Yeah, thanks, Harry. It's great to be here again and great to see all the interest in Graphite Hub. I think it's a great platform and the timing's really good, critical minerals and graphite. So, yeah, we're really happy to be back.
Yeah, no, and I appreciate the support, and it's good to have people like yourself on here. So, let's kick this off, David. So, you've recently returned from Washington as part of the US Critical Minerals delegation. Would you mind sharing how that went?
Yeah, sure. So, look, it looks like the U.S. is now turning their attention to critical minerals. Obviously, there's a lot going on with the new administration in the United States. I participated in a delegation of other critical minerals companies to DC to meet with a number of key decision makers, and there was really strong engagement from across multiple U.S. departments, commerce, defense, energy, the National Security Council. And it really looks like this administration is now turning their attention to the critical minerals, and it's really committed to ensuring that the graphite and other critical minerals can be mined and refined and delivered to the United States in a way that doesn't rely in particular on China. And it's really encouraging to see the kind of signals we're getting from the administration that suppliers, in particular from Australia, are really a part of this ex-China supply chain.
And so, what would your key takeaways from these discussions you've had? What would they have been?
Yeah. So look, I think that this administration recognizes that China is using unfair trade practices, and this is what's giving rise to some of the low part prices we're seeing across critical minerals, graphite including, and probably more to the point for companies like Renascor, they're willing to use a strong set of policy tools to correct a market dysfunction, and in particular, Section 232 trade actions, which allow the executive of the Commerce Department to really take relatively strong action with tariffs or licensing or quotas. They're doing this now, and look, we could expect to see things announced, and we don't know when in the near term. And it also looks like the U.S. is really prepared to deploy to equity and procurement tools, not just loans and grants. And where Australia sits, I think there's also a recognition that in Australia, we have both the mining culture, the regulatory environment, and the quality of assets that are going to fit in with the United States and make us a trusted partner.
And then, so do you see this translating into any tangible support for Renascor?
Yeah. So look, I guess our number one issue is to level the trading playing field. And we aim to be the lowest cost and the most secure provider of purified spherical graphite outside of China. It's difficult to compete with underpriced Chinese purified spherical graphite, but we're confident we can compete with everyone else once the trade distortions are addressed. The current U.S. policy shift, where we're seeing potential tariff shields and new funding tools, is really what can make a competitive environment possible. And that's what we and other companies that have really high quality assets here in Australia need.
And so, you briefly touched on it earlier, but we're starting to see that the US government is starting to take equity stakes in both, lithium and rare earth companies. Do you think this is the right approach for graphite if it were to happen?
Yeah, look, I guess probably the key is any action in equity stakes really first needs to address the underlying market dysfunction. Otherwise, you're trading one problem for another. If these trade distortions are fixed and we get a fair market, to be honest, equity is probably not even needed. The market can work it out. Debt works quite well. It avoids shareholder dilution. With government equity, that can be attractive if it brings premium pricing, like we see in the MP Materials case, or premium offtake terms. I guess, like in our case, we have a strong cash balance, and really what we want to do is we want to choose the capital structure that's best for our shareholders.
And then, so for Renascor right now, what would make the biggest difference to the company? Would it be more capital, stronger policy support, or, as I think we probably do know the answer, is an improvement in graphite prices?
Yeah, look, I guess it's the most important thing, I think, for us and really anyone operating in the critical minerals space is to fix this dysfunction in the market now, where the Chinese are using the bulk buying power to undercut pricing throughout the critical mineral sphere. If that's done, I think everything else works out, and then the best projects rise to the top and they can compete.
And so the other hot topic at the moment is ExxonMobil entering the synthetic graphite space in the US. So how do you think investors should view this company stepping into the market?
Yeah, look, I think that's real positive. I think it validates both the scale and the strategic importance of the anode market. Basically, what big energy is betting on anode, and it shows that ExxonMobil expects ex-China pricing to emerge. And I say that largely because ex-China synthetic graphite is going to really have a difficult time competing with Chinese synthetic. It's more expensive, it's more capital intensive, and that just really reinforces that the market is shifting towards secure, cost competitive supply outside of China, and that's really been where Renascor is trying to position ourselves all along.
Okay, and David, so looking ahead for Renascor, what can investors expect to see over the next 6 months?
Yeah, look, I guess, obviously out of the meetings in the US, Section 232 outcomes, potential tariff exemptions, and really dealing with the price. I think the other thing we could expect to see is some action from existing anode suppliers looking to supply to move into the ex-China supply chains to the United States, into Europe. And obviously here in Australia, we have our own evolving policy and where Renascor fits into that. And then finally, in terms of the specific workflows that we have here, where everything we're doing right now is to reduce risk, reduce time to market, and really solidify our position as among the premier ex-China graphite suppliers. And so a large part of the work, and really the single largest piece of work that we've ever done as a company, is on our downstream demonstration plant. We're in the construction phase right now. We expect to soon get into commission and operation, and that's really an opportunity to solidify our advantage. It's not just having a tier one graphite deposit, but to really unlock the downstream and we believe make us a leader in the production of purified spherical graphite.
Fantastic. Well, no, it's an exciting time coming up for Renascor, David. So appreciate you taking your time today to join us on Graphite Hub's interview series to share your insights on how your trip to the US went. And we look forward to having you again on here sometime soon.
Great. Thanks, Harry. I always appreciate the opportunity.
Fantastic. Thanks everyone for tuning into this episode of Graphite Hub's interview series. We'll see you next time.